What's up, people? This video is going to show you how to do a liquidity sweep strategy. The difference between the way I do liquidity sweeps and the way other people do it is once the liquidity sweep is confirmed, I wait for a pullback to enter. This lowers the risk, increases profitability, and just helps it to become a better trade overall. Doesn't work 100% of the time, but it works more often than not. And it definitely makes the whole liquidity sweep strategy much better. Because the problem I see with other people's liquidity sweep strategies is their stops are a million miles away. And that's just not acceptable risk, in my opinion. So if you follow this strategy and you trade with extreme discipline, I cannot express how much extreme discipline you need to trade successfully. You cannot enter FOMO trades. You cannot enter bullshit trades. You need to stick to the strategy. That is it. That is all. You only enter on when it's confirmed, and you hold to your targets, and you exit at your stop loss. You will be profitable if you follow this. Please like, please subscribe, share this video, all that shit. Thank you so much. You can see I've marked yesterday's high of day, yesterday's low of day. Pre-market high, pre-market low. Right off the bat, I can see on open, there's a good high probability that I would probably take that gap play up to 449.33. There it hit. Now, here, we just had a body candle close on the 5-minute chart below the wick of the previous low. That's the first thing we're looking for. Now we have, and we entered below pre-market low. Now we can start looking for it to possibly take liquidity. In order to confirm liquidity, we need a candle close above the wick of the previous high. There, right here, we have a close. Most people would enter on this right here since we closed above the previous high. Their stop loss would be way below the previous low. They would target, first target would be pre-market high, second target would be yesterday high day. Total risk to reward would be 2 on that. Me personally, I would not enter right here. I would like to see a pullback all the way back here somewhere. All right. After all this, I would probably just go ahead and enter right here, which isn't much better of an entry. I usually like to see a better pullback, but it's not coming easy. So my stop loss below the previous low. Got pretty close to the target. Considering the consolidation, good chance it's going to pull back. I would probably exit, within the as close to this pre-market high as I could get. Hitting basically target one. All right, we will go to the next day and look at the next one. Let's mark our chart. Yesterday, high of day. Yesterday, low of day. Let's get any pertinent highs and lows. All right. Market high. Market low. So you know, every day that we open, there's a 98% probability that price is either going to chase to pre-market high or pre-market low. It's a trade you can also take if you can get a sense of which direction it's going to go after. Broken pre-market high here. We now have a close with the body of the candle just about 1 pip below previous low. So that is an entry to go short. I would wait for a pullback back up. This might be a good entry here. Obviously, the better entry would have been the original. But again, this is going to work in your favor more often than not, going with waiting for that pullback. That'd be first target at the bottom of the previous low. Second target, pre-market low. All right, looks like we have a losing trade on this one. Again, we've broken a low right here. So you can enter. Stop loss up here. Targets are going to be all the previous lows, okay? So first target, second target, third target. Got a hold some of these. All right, look, we hit second target right there. Um, on this, I would probably definitely get out on that second target. You can hold longer, see what happens. But as you can see, we've already made up for the previous loss and made profit on the day. There it goes, hitting the third target. See what happened here. Came up, faked out to the high, swept liquidity, came back down, went back up into liquidity again, swept that previous high, broke liquidity right here, came back down. Let's go ahead and chart for the next day and continue. Targets. Market high. Market low. Not a very big pre-market day. Maybe we've broken the high. Let's see if it reverses. Boom. We have a reversal. We're going to go back up there. Wait. Looking like a good trading day. I'll place that day. Mark yesterday's high a day. Yesterday's low of day. Let's mark this high back here. This is really a realistic strategy that if you follow with great discipline, you will profit on. I mean, trading is boring. It is supposed to be boring. It is not supposed to be fun. So, yeah, I mean, this is kind of boring just waiting for this whole thing to happen. But do you want to win or do you want to lose? You know? All right. Looks like we're going to open the gap. Maybe. Maybe not. Broken the pre-market low. Broken the previous highs right here. I don't think that's an entry. I would definitely rather wait until this high was broken, or I was convinced of any liquidity sweep. All right, it's been broken. With a really shitty slow day, I don't know if it would be safe to take, but good. Good enter on that. Quite frankly, there's really not any previous highs to target unless you pull them out of pre-market, which isn't recommended. Could have pulled a tiny little amount on that day. It's really another shitty trading day. Stick with me, learn this strategy. It does absolutely work. Trading is supposed to be boring. If you're doing strategies that are really fun, I bet you're risking everything and losing everything too. Pre-market high, pre-market low. I'll bet that this one's headed to yesterday lower day. That broken the previous high. Let's wait for a pullback. Might be good enough to enter. I would take this. Got an entry. Got a low to go under. We'll just go with yesterday low a day. Target the previous highs. First target, second target. Good risk to reward ratio. I will not enter a trade unless I have at least a 0.7 risk to reward ratio, is what I've determined for this strategy to remain profitable. Now move our stop loss down since we have a new low. Pretty close. I'd probably jump right there. Now hit the target. Boom, hit target 2. See what I'm telling you? This strategy is beautiful. And we moved our stop loss up because of a new low. This became a risk to reward ratio of 10.5. That's fucking amazing. And a win of what, 446.21 all the way to 448.93. Massive ass win. Massive. Low risk. Marker lines, get rid of our targets. Mark any previous highs, lows, whatever. A little too far. Pre-market high, pre-market low. I said 98% probability it always targets pre-market high or pre-market low. You can take that trade if you can figure out which way it's going to go. Usually, in order to figure out which way it's going to go, I start out on the 1 minute chart. Where are we? Of course, it just knocked me out of fucking um, replay mode. Let me pause and get back. All right, we're back. But anyway, you can look at the 1 minute chart. Oh, this is not even the right day again. Or yeah, it is. Yeah, it is. You can look at the 1 minute chart and it'll give you an idea of whether it's going to target pre-market high or pre-market low. You know, I would definitely wait at least 2-3 minutes before I jumped on that though. All right. So we've broken the high here. Now we're just waiting for a reversal confirmation. Unless it just goes up all day. All right, coming back down. I literally gotta wait for it to break the previous low and then pull back. Okay, broken that. Well, no, need a candle close below. Okay, broken. Nope. It's the importance of waiting for candle closes. Okay. Now we have broken it. could enter right here. I personally probably wait for a pullback. A pullback, that looks good. I'd probably enter somewhere around here, or you could wait for confirmation for it to turn the other way. It's good entry. Like it. Stop loss above that high. Targets. First target's going to be right here. Second target, pre-market low. Look at that. Fucking hit them both. I mean, within 10 cents, take it and run. You know what I mean? Keep holding too. And there's the perfect hit on the target. Boom. And it looks like it created basically a doji day, slightly down. Oh, and it's going to keep on going, huh? All the way to yesterday, low a day. Great win. Low risk to reward ratio. When it comes down, it's target two. I mean, I wouldn't have held past target two just because when I'm looking left, I'm not really seeing lows that I can play off of. Yesterday, low a day, you could definitely hold to that. You know, always you can always try and hold your runners, whatever. Right. Second target was pretty probable though, with a 1 to 3 risk to reward ratio. Same profit again. Okay. Let's get rid of our targets. Go to the next day. Hope you're starting to see how this strategy can really be profitable. It doesn't always win. No strategy does. That is okay. Stay high all day. Low day. Assuming that's low day, probably not. And it's okay. Check for previous highs, previous lows. Steady downtrend here on a larger chart. Going slightly down every day, a little more, huh? Patterns, people, patterns. Pay attention. All right, pre-market low. Market high. I would probably take this as the high. Where do you think it's going to go when it opens? I got my money on it, runs to pre-market low. Oh, well, it's going to do it before it even opens. So never mind. Hey, we've broken the low. See what happens. Broken the high. Candle close above the high. Feels like there's some big momentum with this one. I would be so tempted to jump in, but I have to be safe. I have to wait for my pullback. If I miss it, I miss it. And you can see it started pulling back. And hindsight's 2020, but chances are it went down real hard, then started climbing back up. I'd have probably jumped in the middle there somewhere. Terrible risk to reward ratio on this trade. Well, 1.13. That's not bad at all, actually. See, like I said, I would have probably entered as it was coming back up. In theory. It hit the fucking target, okay? I really don't have any other targets. You can hold this as a runner. The safe thing to do is to exit at this line because you don't have previous targets to run off of unless you want to use these, but I would never use the previous days. Never do that. But just looks like it fucking reversed anyways. So is it coming up here, getting liquidity to go down? Quite possibly. Let's see if there's a liquidity sweep the other way now, huh? We've broken this low with the candle close. We got a pullback. So that could quite frankly be an entry to go short right here on this pullback. This would be the first target, which it hit, and the second target. Okay. Already hit the first target. First target many times now. I would definitely not be holding still. Yeah. Anyways, that's 2 wins in that day. This strategy. Mark yesterday low day. Such an easy strategy once you get used to it. And if you can truly, I mean, truly have the extreme discipline that it takes to wait for this to happen, to wait for your pullbacks, to stay true to your stop losses, stay true to your targets. Don't get greedy, don't get stupid. It's all psychology. That's all it is. But I mean, I'm hand feeding you a strategy that I know for a fact will make you profitable. You really, truly remain extremely disciplined in following it exactly. There's not previous highs, lows to target. Don't do it. You need them to target. I mean, you just really got to be disciplined when there might be times where 2 days in a row you don't even get a play. You're just like, damn, what am I doing? I know because I've done all this shit and lost so much money due to bad psychology before. It, by all technical definitions, break that low right there, just barely. We have an uptrend, broken high right here. Discipline says wait for the pullback. Not much. This is where you're waiting for the pullback. Fucked you. I know it's probably going to yesterday high a day, maybe the pre-market high. So, yeah, a lot of people would have entered down here as it broke that high. I wait for my pullback. This is one instance where, yeah, that hurt me, but whatever. Waited for the pullback. Now my stop loss is going to be that low, right? Here broke yesterday high and day and pre-market high. I I might have not had the best entry on this one. Still won. I still think my method of waiting for that pullback is better. Of course, it's not going to always be the best thing, but it's going to save you more than it's going to hurt you. And there might be times where you think a liquidity sweep's about to happen, and guess what? It never happens. You waited for that pullback and you saved yourself, couldn't realize it wasn't happening. See how you really don't need all these crazy support and resistance lines? I mean, for the most part, just pre-market high, pre-market low, yesterday higher day, yesterday lower day. There's plenty of days where the previous highs and lows are going to come into effect. But as you can see, I don't hardly pay attention to support resistance at all. And my lines are always what seem to be getting targeted. Interesting, right? I can pretty much tell where something's headed in a given day just based off of this. Downtrend. Do another day here. You guys can get the hang of this. Hey, if you like my content, like, subscribe. I'm gonna be doing many videos with all kinds of different strategies coming out. I'm gonna start pumping out some content. Share this video with people trying to learn strategies. This is a strategy that yeah, I know many strategies, but this one is probably my favorite. Again, where do you think it's going? You think it's going to pre-market low? Probably. We'll see. Oh, bam. Look at that. Weird. You can see, like, if you take out this 8 a.m. line, which is always crazy, some days I don't use the 8 a.m. line as the high. Some days I would go like right there because it's just kind of hard to tell. But you can see it went above this previous high, swept liquidity, really shot down. This is a day where I have no choice but to say ride the trend. I have no lows or anything to target, so I'm not going to enter on this shit. All right, might enter the call. Broken the previous high. Let's see if we get a pullback. Ooh, see if we can see better. Probably enter long somewhere around there. Plus there. Target 1. Target 2. We're gonna lose. This is one of those times we're at break even. We have a lower high. I would definitely say exit right here. Going long, I have a lower high. I'm at break even. I'm going to eliminate my risk. I'm going to exit. I actually see a liquidity sweep right here on a smaller time frame. It's going up, comes back down. It breaks this low right here with the candle close of the body below it. It pulls back. You could have entered on this smaller time frame liquidity sweep up to this pullback. Very small stop loss right there. Target 1, target 2, target 3. Hit 2 of the targets. 3, maybe. Would safely say 2. Oh, it did hit them all. Remember, risk to reward ratio, absolutely imperative when trading. It doesn't have to be huge. It doesn't have to be 1 to 3. It doesn't have to be 1 to 2. It doesn't even have to be 1 to 1. If you hold your trades to your targets, exit at your stop loss, then chances are you only need like a 0.6, 0.7 risk to reward ratio to be profitable. There's even plenty of them 0.4. I mean, you don't need a massive win percentage to be profitable at all. Get rid of these targets. We'll do one more day. Like, subscribe. I'll be doing a lot more videos, etc. Going over strategies. I want to help people learn to trade. If you got questions, post comments, whatever. I want to do this damn thing. If you think the quality of the video sucks, can't hear me good, then I need to hook up my microphone. Leave a comment, tell me I suck, whatever. I just deleted my pre-market high targets. Well, I use Trading View for my charts. You're gonna subscribe to Trading View. Black Friday's coming up. That's the best time to subscribe. Oh, pre-market high. Oh, want to go long to pre-market high right here? I don't know. We have lower high. Another lower high. Tricky downtrend. That high. Close below. Then it shot down. Yep. Liquidity. You don't understand this shit, you need better explanation, leave a comment. I'll show you. Anyways, so price should have not included that. It broke this high. Let's see where we have a candle close. We have a candle close below right here. Never really got a good pullback to enter on. And by the time we did get a pullback, it's to yesterday's low day, and I don't have any good targets to target, so I wouldn't be in on this. Well, we might get a close above this high, so I'm still nothing. All right, I'll call that good for this video. Like, subscribe, I'll be sending more. All right, let's just do a little recap. I mark yesterday's high of day, yesterday's low of day, the pre-market high, and the pre-market low. I will also mark other recent pertinent highs and lows left on the chart. In order for once a high or low has been broken, let's say it's to the high side, I wait for a candle close to occur below the wick of the previous low. That confirms liquidity has been swept. At this point, I wait for a pullback and try to get a new high to be created before I go short. Exactly the opposite going long. Okay, I do this on the 5-minute chart. I mark highs or lows as targets, and I use the previous high or low as the stop loss. I do move my stop losses down as new highs or lows are created. All right, peace.